Most people think selling electric cars is the business of the moment, but there's a number that very few dealership owners ever reveal. The margin on the vehicle itself rarely exceeds 5%. 5%. On a $40,000 car, the gross profit from the sale is $2,000. So where does the real money in this business actually come from? The electric vehicle market is going through one of the fastest expansions in the history of the automotive industry. In 2023, sales of electric and plug-in hybrid vehicles grew more than 90% compared to the previous year in several major markets. In 2024, multiple countries recorded their highest ever annual EV registration numbers. These are impressive figures, and they explain why so many entrepreneurs have started looking at this market as a business opportunity. But what these numbers hide is just as important as what they reveal. The electric vehicle market is still concentrated. Most sales happen in cities with higher per capita income, expanding charging infrastructure, and consumers who already research the product before walking into a showroom. That means opening an electric vehicle dealership in a major city like Los Angeles, Miami, or Chicago is a completely different business from opening one in a smaller market, where charging infrastructure is still scarce. Buyers have more doubts and the sales cycle is longer. Globally, the electric mobility sector moves trillions of dollars. Companies like BYD, Tesla, Volkswagen, and General Motors have invested hundreds of billions of dollars in the transition to electrification. And this is exactly where the story gets interesting, because in the authorized dealership model, the manufacturer defines much more than the product. It defines the price, the minimum inventory, the showroom standards, the team training, and in many cases, even the margin the reseller can apply. The automotive sector moves enormous figures when all segments are combined. New and used vehicle sales, parts, services, and financing. Electric vehicles still represent a small share of that total, but with accelerating growth. And it is precisely at this moment of expansion that the business looks most attractive, and where the risks are easiest to underestimate. Because opening an electric car dealership is not like opening a store. It is like entering a mandatory partnership with a manufacturer that has far more negotiating power than you do. And before understanding how much is left over, you need to understand how much it costs to get in. Entering the electric car dealership business requires a volume of capital that surprises even those with experience in traditional retail. There is no single investment range. It varies by brand, city, and size of the operation. But there is one reality common to virtually every authorized network. The manufacturer sets the minimum requirements, and those requirements are expensive. For an authorized dealership of a premium brand like BMW, Porsche, or Volvo, the initial investment can range between $600,000 and $2,400,000, depending on the required structure. For volume brands like BYD or GWM, the investment typically starts between $300,000 and $800,000. These figures include physical space adaptation, charging equipment, diagnostic systems, mandatory technical training, initial inventory, and working capital for the first months of operation. And here is the first invisible cost: inventory. Unlike a pharmacy that restocks product by product based on demand, a dealership needs to keep physical vehicles available for display and immediate delivery. A single entry-level electric model costs between $30,000 and $50,000. A mid-sized dealership needs to maintain between 10 and 20 units in inventory. That means between $300,000 and $1 million sit immobilized in vehicles sitting in the lot. Capital that does not circulate, does not generate returns, and depreciates if the manufacturer launches a model update or reduces the list price, which in the electric vehicle market happens with a frequency that no combustion car reseller was ever prepared to face. Beyond inventory, there is the physical infrastructure. Electric vehicle manufacturers impose rigorous showroom standards: specific lighting, finishes, demonstration charging stations, standardized signage, and, in many cases, integrated digital environments. A complete renovation to meet a premium brand standards can cost between $60,000 and $240,000 in construction and installation alone. The team also represents a cost that goes beyond salaries. Technicians specialized in electric vehicles are scarce. Training requires certifications from the manufacturers, which in some cases are conducted abroad, with travel, accommodation, and time away from the operation. A certified high-voltage technician can cost between $800 and $1,600 per month, and the dealership needs at least 2 to operate safely. The break-even point of an operation of this size is rarely reached before 18 to 36 months, and during that interval, the cash flow must sustain rent, payroll, energy, management systems, insurance, and all fixed obligations, regardless of how many cars are sold each month. From the outside, it looks like the most modern business in town. From the inside, it is an operation that demands financial endurance before showing any results. An electric car dealership has revenue streams that most people never imagine. And the vehicle sale itself is, paradoxically, the least profitable of all. The primary revenue comes from new vehicle sales. But as already established, the gross margin on the vehicle rarely exceeds 5% of the list price. In some contracts with volume manufacturers, that margin can be even lower, reaching 3.5% on high turnover models. On a $40,000 sale, the gross profit is $2,000, before paying a single operating cost. But there is a second revenue block that completely changes the equation: performance bonuses. Manufacturers pay monthly and quarterly bonuses to dealerships that hit volume targets, customer satisfaction scores, and brand standard compliance. These bonuses can represent an additional 2 to 4% on top of vehicle revenue, and are, in practice, what transforms a marginal operation into a viable one. A dealership that sells 40 units per month at an average price of $50,000 generates $2 million in revenue that month. A 3% bonus on that volume represents $60,000 in additional income, money that does not appear in the unit margin, but that sustains the entire operation. The problem is that this bonus depends on hitting the target, and a missed target means zero bonus, or in some contracts, a partial clawback of amounts already received. The third revenue stream is after sales: maintenance, servicing, home charger installation, accessories, and technical services. And here lies one of the biggest surprises in the electric vehicle dealership business. Maintaining an electric car is significantly simpler than maintaining a combustion vehicle. Fewer moving parts, no oil changes, no fuel filters. That sounds like a win for the consumer, and it is. But for the dealership, it means the service department generates less revenue per vehicle over time. A traditional dealership can generate between 15 and 25% of its total revenue through after-sales. In electric vehicle dealerships, that percentage is still between 8 and 15%, and tends to fall as models become more mature and reliable. The fourth revenue stream is financing. When the customer finances the vehicle through financial products recommended by the dealership, the store receives a commission on the contract. On a $40,000 vehicle financed over 60 months, that commission can range between $400 and $1,200 per contract. In an operation that closes 30 financing deals per month, that is between $12,000 and $36,000 in additional revenue, without selling a single extra car. Now, where does all that money go? Renting a commercial space suitable for a dealership? With a lot, showroom and service area, in a major American or international city, can cost between $8,000 and $24,000 per month. Payroll for a team of 15 to 25 people, including salespeople, technicians, receptionists, and managers, consumes between $16,000 and $40,000 per month. Adding insurance, management systems, mandatory local marketing, required by the manufacturer, and administrative expenses. The monthly fixed costs of a mid-sized operation land between $50,000 and $100,000. And there is one cost that nobody mentions before you get in: the cost of immobilized capital. If the dealership has $800,000 locked in inventory, that capital has a real opportunity cost. That money could generate meaningful returns in conservative investments. This number never appears on the income statement, but it exists. And every business owner who understands finance knows it must be accounted for. The most important number in this business has not been revealed yet, and it will surprise you, because it is not what most entrepreneurs imagine when they decide to enter this market. You already know how much it costs to get in, how much revenue comes in, and where most of the money goes. But there is one number that virtually no dealership owner ever reveals publicly: the real net margin of this operation after every cost is paid and every bonus is counted. And that number is going to completely change the way you see this business. If this documentary is making sense to you, leave a like right now. Every like helps the channel keep producing investigations like this one, and it is what ensures the next revelation reaches you. Because what comes next is exactly what manufacturers and dealership owners would prefer you never found out. A mid-sized electric car dealership, well-managed, operating in a major city, with a monthly volume of between 20 and 40 units sold, has a net margin that ranges between 1.5 and 4% of total revenue. In absolute numbers, in a month with 30 sales at an average price of $50,000, gross revenue is $1,500,000. A 3% net margin represents $45,000 in net profit for the month, or $540,000 per year. That sounds like a lot, but the initial investment to build that operation was $800,000. That means the return on investment is approximately 36% per year, and the payback period on the invested capital is 2.5 to 3 years in a favorable scenario. Except there's one word that changes everything in that calculation: favorable. The electric car market has a characteristic that no other retail segment possesses with the same intensity: the price war driven by the manufacturers themselves. Tesla reduced the prices of its models more than 15 times between 2022 and 2024. BYD made similar moves in multiple markets. When a manufacturer reduces the list price of a model, every unit of that model sitting in the dealership lot loses value immediately, and the loss comes out of the reseller's pocket, not the manufacturer's. A dealership with 10 units of a model that suffered a $3,000 price reduction loses $30,000 of margin in a single day, with no warning, with no compensation. That is the most silent and most devastating risk in this business. The second risk is the concentration of power. In the authorized dealership model, the manufacturer can revoke the contract, change targets, alter margins, and modify required standards at any time, within contractual limits. The reseller built a structure worth hundreds of thousands of dollars to operate a single brand. If the relationship with the manufacturer deteriorates, there is no simple plan B. The third risk is the speed of technological evolution. A model launched today can be considered outdated in 2 years, and the electric car consumer is, on average, more informed and more demanding than the combustion car consumer. Stagnant inventory in this segment erodes margin at a speed the traditional automotive sector never experienced. So, when does this business actually make sense? It makes sense when the entrepreneur has enough capital to sustain at least 24 months of operation without relying on profit to cover personal expenses. It makes sense when the location guarantees real demand, not just potential. It makes sense when the chosen brand has a track record of respecting its distribution channel and maintaining a stable pricing policy. And it makes sense when the owner understands that the profit does not come from selling the car. It comes from intelligent management of bonuses, financing after sales, and working capital. The businesses that thrive in this segment are not the ones that sell the most cars. They are the ones that best manage the money between one sale and the next. Most people look at an electric car dealership and see the future. They see technology, sustainability, accelerating growth, and a business opportunity that seems too obvious to ignore. But what this investigation revealed is that the appearance of this business and its financial reality are two completely different things. The owner of an electric vehicle dealership does not make money selling cars. They make money managing razor-thin margins, chasing performance bonuses, optimizing customer financing, and controlling an inventory that can lose value overnight because of a decision made on the other side of the world. Inside a manufacturer's headquarters, they will never visit. It is a capital-intensive business with thin margins and asymmetric risk, where the manufacturer holds the power and the reseller holds the responsibility. And that is exactly why the dealership owners who thrive are not necessarily the best salespeople. They are the best financial managers. The electric vehicle market will keep growing. The demand is real, the transition is irreversible, and the opportunities exist. But entering this business without understanding where the money really is and where it really disappears is the fastest way to turn an investment of hundreds of thousands of dollars into an expensive lesson. Now you know what is behind the profit of an electric car dealership, and you will never look at this business the same way again. If you had the capital to open an electric car dealership today, would you enter this market or would you prefer a business with more predictable margins? Write in the comments. I want to know what you think after seeing all of this from the inside.